What is so interesting, I find, is the complete lack of interest in Western capital markets about silver and gold, while at the same time there is enormous demand, obviously building up in Asia and particularly China. Silver has, if you like, an additional factor driving it. One is that India is now expanding its economy quite rapidly in the direction of photovoltaic cells and similar, if you like, environmental manufacturing activities. But now you can begin to see why the Chinese, who traditionally have always regarded gold and silver as money, are buying both gold and silver.
According to legendary investor Alasdair Macleod, there is a noticeable lack of interest in silver and gold among Western capital markets, which starkly contrasts the burgeoning demand in Asia, particularly in China. As much as Western investors want to ignore the gold market, there is no denying that we are witnessing a generational shift in the marketplace. Market influence is shifting from the West to the East as Asian buyers, specifically Chinese retail investors, display an insatiable appetite for gold and silver. Chinese silver imports surged to a 3-year high of approximately 390 tons in December, before slightly dipping and then soaring again in April to over 340 tons. This surpasses the 5-year monthly average of around 310 tons. Despite a 13% tax imposed on imports, the premium on Shanghai spot prices exceeded 15% last week, indicating robust demand. Moreover, India is rapidly expanding its economy in sectors like photovoltaic cells and other environmental manufacturing activities, driving significant demand for silver. Major Indian corporations like Reliance Industries actively purchase silver from COMEX vaults, contributing to inventory depletion. This trend is noteworthy, as the futures market typically doesn't focus on physical delivery, underscoring India's unusual demand for silver. The same situation is observed with gold, as the People's Bank of China has been steadily accumulating monetary gold for 18 consecutive months, with each purchase announced via its State Administration of Foreign Exchange, SAFE. These substantial purchases made China the largest sovereign gold buyer in 2023, with 225 tons added that year alone. Alasdair asserts that this massive and growing demand from China, coupled with strategic moves by China and its allies, is effectively reshaping the global precious metals market. The influence of Western institutions, which have historically dominated this market, is being challenged. We will present clips from Alasdair Macleod's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Fascinating thing is that, yes, we know silver is an industrial metal. It is priced as such. I mean, when you've got a gold-silver ratio, I'm looking at my screen, of 73 times, that is not pricing it as money. But it does respond with gold as if it was a junior form of money. So, it hasn't gone totally. What is so interesting, I find, is the complete lack of interest in Western capital markets about silver and gold, while at the same time there is enormous demand, obviously building up in Asia and particularly China. Silver has, if you like, an additional factor driving it. One is that India is now expanding its economy quite rapidly in the direction of photovoltaic cells and similar, if you like, environmental manufacturing activities. I'm sure that major Indian corporations like Reliance Industries have been cleaning out COMEX vaults. I mean, the amount of silver that's been stood for delivery is really quite dramatic. Particularly when you bear in mind that the futures market is not meant to be a delivery market at all. I mean, the only reason that you have a delivery facility is basically to notionally tie the future to the price on expiry. So that is interesting. But I think for both gold and silver, it's worth understanding the position of the Chinese. If you're a saver in China, you've probably got in your mind the fact that you've lost a lot of money, or you would have lost a lot of money if you'd bought equities over the last 3 years. So it's not going there either. We do know where it's going. It's actually going on bank deposit. And there is a difference between our banks and Chinese banks. The Chinese banks are effectively backed directly by the state. Demand from customers switching from ordinary deposits into bank deposits, I would have thought, goes, pretty directly via the bank into gold. They also have apps in China. You've got these apps, and you can buy and sell gold on an app. I mean, we've got that sort of thing over here as well, but they've got it in China. Don't forget it. And from what I understand, very much unlike us, where we actually have very little interest in coins and bars. You have to be a bit die-hard to be interested. In China, they're queuing around the block to buy gold, jewelry and small bars and items like that. The big stores are literally selling out every day. This is not necessarily reflected in the withdrawals from the Shanghai gold exchange, because the big banks, in accumulating gold on behalf of their customers, don't take it out of the Shanghai vaulting system. It remains in the vaulting system, so it's not effectively delivered. So there's a huge, great iceberg, if you like, of gold. We only see the tip of it in the form of deliveries actually accumulating on behalf of the Chinese people in the vaults. Now, to give you an idea as to what 35%, in other words, 6 trillion of savings actually buys in terms of gold, is the equivalent of about 75,000 tons of gold. Now, obviously there isn't the gold available. But now you can begin to see why the Chinese, who traditionally have always regarded gold and silver as money, are buying both gold and silver.
BRICS member China is strategically divesting from the U.S. economy by selling off billions worth of U.S. treasuries and agency debt over the past 7 months, opting instead to bolster its reserves with gold. In the first quarter of 2024 alone, China unloaded $53.3 billion in U.S. treasuries, with an additional $21 billion sold during the latter months of 2023. This move aligns with the broader BRICS agenda of de-dollarization, as the group has been steadily increasing its gold reserves since 2022, gradually replacing U.S. treasuries with the precious metal. Alasdair highlights the cautious approach of nations like China and India towards transitioning to a gold standard, acknowledging the potential destabilizing effects on the global financial system. While China may be hesitant due to its strategic considerations, India's reliance on Western markets also contributes to its reluctance. However, Russia's response contrasts with its counterparts, especially amidst mounting geopolitical pressures. The recent decision by the Russian central bank to peg the ruble to gold, with 1 gram equating to 5,000 rubles, represents a proactive measure aimed at stabilizing the currency and augmenting gold reserves. These strategic shifts underscore the intricate interplay between geopolitics and monetary policies. As Alasdair notes, these developments highlight the complexity of geopolitical and monetary shifts, which can potentially escalate economic tensions and disrupt global financial stability.
Central to replacing the dollar is the problem of what currencies do we use? And at the moment, they just don't seem to have a complete answer. What they are saying, I think, is that we will use national currencies. And that is, it's all very well using national currencies. You can use that maybe to measure trade imports, trade exports, and all the rest of it. But underlying this, there is a balance. So if you take the situation, say, a simple one between China and Saudi Arabia, China buys oil from the Saudis. But what China then does is it invests in infrastructure in Saudi Arabia. And so I think that, what we're looking at is not so much trade deficits and surpluses. What we're looking at is the maintenance, if you like, of a balance of payments. That is the way it's going to be done. And where gold will come in is where there is a balance, unspoken for in the balance of trade between more than one party, then they have got the option either to take one other's currency or to take Chinese currency or to use gold. And I think China doesn't want to be seen, if you like, as destroying the Western capitalist system. And so what she is doing is she is sitting back, if you like, on any idea that she's going to put the yuan onto a gold standard, because that would destroy the dollar in pretty short order. India is in a similar situation. And India is more reliant in many ways for her growth on Western markets. The two, the Asian nations are going to go onto a gold standard. I think the hole in this argument is Russia, because the more we put pressure on Russia, the more Russia, I think, will take economic action or take financial action against the West. It could very, very quickly destroy the dollar simply by putting the ruble onto a gold standard. The reason it hasn't done that, I think, is because of its partnership with China. And also with Iran to a large extent. I think the Saudis would be quite happy to go onto a gold standard because they share the similar objectives of trying to stabilize the value of their oil, their oil exports and oil reserves. So the more pressure that we put on Russia, we're forcing her to choose either this becomes an outright war as opposed to a hybrid war, or it's a financial war. And I think that when you get to that point where, you're almost sort of expect nuclear missiles to start flying, I think that Russia will go for the financial option to destroy us.
If China keeps stockpiling gold and silver while the West stays disinterested, we could witness a major shift in the global precious metals scene. Rising demand from China and India might tip the scales towards the East, potentially altering pricing, trading norms, and investment approaches. This shift could challenge the long-standing dominance of Western players in the market. Share your thoughts on Alasdair's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.